Okay, let's take a look at gold and silver because I think that's a very important market you need to be paying attention to as it's giving you a pullback. And it's been like a very, very strong market for the rest of the year. We are in the last quarter for this year. So looking at every quarter which gold has printed since October 2023, it's been like a bull quarter. And right now we're undergoing like a initial snapback when the new quarterly candle has opened. The first thing to note is that this previous high is a very, very strong SL level on the quarterly chart. And the last quarter was probably one of the strongest quarters gold has printed in its history on a closing basis. Like anytime gold has like punched up at this length, there have been like wicks. There was a wick, there was a wick. But it actually like closed at the top, which is like quite insane that it has actually managed to do that. Which is reminding me of something over here. You see, take this thing out. When gold was punching, you see how the quarterly candles were like expanding in length and they were closing at the highs. So when the gold quarterly candle closed at the high over here, what did the monthly candle do? The next month, you gapped up a little bit. There's a massive pullback, right? So that's the month of October, the month we're in at the moment. If you look at the weekly chart, the first week was the pullback. See that inside weekly candle? You went for the lows, took out the lows, rejected it. That's an inside weekly candle failure. I would personally be taking a long position over there. See what I'm talking about? You took the long position on the lows of this inside weekly candle failure. Next week, the market jumps higher. Then we have another inside weekly candle. You have another inside weekly candle. That's double inside weekly candle. And the third one, which is in November 1979, you had a massive punch up, broke out of this consolidation, attacked the upside liquidity, and then going into December, you had a massive, massive run up, like a melt up, which was the expansion of this quarterly candle. This is exactly what we need to be positioning for the next 3 months. Okay. What I just discussed, I have a feeling it's the same thing playing out in gold. We have an inside weekly candle. We are attacking the lows of the inside weekly candle. So, do I enter right now? I don't think so. See, the thing is, with gold and other asset classes, you ideally want to wait for like a major event to transpire before a bottom could be printed. And I think the major event which is going to be happening is the CPI event, which is on Thursday. So I would personally wait till CPI event, and after the CPI event is done with, I'll take like option calls on gold. But yeah, this is a very very good setup, and it's possible that you can like come down till here. See there's some equal lows sitting over here. That's where I feel like, it can come down, take out these lows, fill this gap, this fair value gap, this pump which happened, it can fill that, come into this shelf where the market had tested this level, like go back over here. See, it was tested like once, twice, three times, and then went up. It's coming back over here. This could be an area where you can like open swing option calls for like December. So right now we are in a situation where you are taking out the previous 2 week candles low, which means that there can be some kind of a follow through to the downside. However, on the 3 week chart, you are still printing an inside 3 week candle. Now, is it gonna like close like that? No, we have 10 days more. Like we don't know what's gonna happen next week. So I will be like judging it based on how the next week's candle closes for the 3 week candle. But right now, what I'm thinking is that it's gonna run down. It's gonna go here into this SR level, and this area is a pretty solid bullish auto block, and that's where I would be looking to enter swing long positions. Now, if just if and only if this thing fails and we keep going down and we come here, this is the mother of all SR levels at 25.29. Why? Because this was tested one time, two time, three time, four time, five time, and the fifth time as well. You see this back and forth. You can like properly view it on the 15-minute chart. It's not exactly visible. Oh my god, it's not even visible on the 15-minute. Let's go on the 5-minute. There. So you punched into the level, you came back down, punched above, came back down, and went up again. So this level was technically tested one, two, three, four, five, and then the sixth time you tested it again, retested it, and broke higher. So if the market like suffers a massive drawdown, I want to say like it's a massive drawdown, but let's just say that it comes all the way down till here. I would keep sizing up my position. I'm not gonna be like, oh, I need to stop myself out. I'll size up my position, even on this one, and I will be looking to go heavier on gold option calls when it comes down here because this is a very, very clean SL level. You have a very clean. You can likely see that this is the fair value gap sitting over here. So if gold drops and comes all the way to here, that's where you want to take out some cha-ching from your pocket and put it into gold. Like this is the macro dip we're talking about, where you will be buying the macro dip and getting ready for the end of the year run up on gold, which should start in like November after elections are done with. And on the 3 week chart, that is that is a proper bullish order block on the 3 week chart. So if it comes back and tests this base, you can take an option on position with a stop loss below 24.67, and you would be holding it till like December comes to an end. So I would be like targeting like at least 3,000 on that. That's a 7.25 risk reward ratio on gold. Gold has actually gotten truly overbought. See that green thing popping up, which happened last time as well over here, and then over here. Generally, when you go overbought on a daily, you get like prolonged periods of consolidation, which is kind of what was warranted on gold at the moment. So that consolidation is leading to a pullback, and I would not be surprised if the pullback is a bit deeper than usual. But I would be very, very happy if that pullback leads to like taking out this low and coming and attacking this SR level, because that's the best risk reward ratio you can get on like a raging bull market of an asset. So that's gold for now. Let's take a look at USD JPY. Now, if you remember my teachings from mentorship session, I have talked about how gold and USD JPY are inverse of each other. Now, if I'm talking about gold coming for that SR level at 25.29, I would be paying attention to USD JPY too, because if gold is going down, USD JPY is going up. They both have an inverse relationship. Now, what I talked about the SR level on gold being such a strong one over here at 25.29, if this SR level gets tapped when USD JPY is rallying and goes for its own SR level on the daily chart, which is over here at 151.937, I would have even more confidence that gold is gonna bottom out and it should be going up, because USD JPY is gonna top out around here and it should be going down from there. So it goes back and forth between both of them. Right now, I can make a case that USD JPY definitely wants to go up to there. So I don't have an incentive to actually long gold just yet, because the money flow is like against it if USD JPY is going to go up. However, this SR level which I'm talking about, that is one of the strongest SR level I've seen on the weekly chart ever, like on any asset class, because it was built on a period of 2.5 years. Like this was the first ever rejection we got from this level, and it went down for nearly 6 months. Then we spent another 6 months coming back, tested the exact level. We did not even go like even a cent above it. See how close that was? After testing it, price went down for like at least 4 or 5 weeks. And then we went up, tested that level again. Notice on how you went sideways and then punched above it, like that. Came back down to retest it. That was a perfect retest. Once you retested it, went up again, took out the high, and then he came back down. You see this tap over here, and the next weekly candle goes up. It tries to fill in the fair value gap, but then it sells off very, very sharply. So on the daily chart, this is where you want to enter short on USD JPY on a swing basis. And for gold, that would also mean that you enter long when it gets there. If both have like synchrony in terms of when this level is being tapped, that's where you want to be entering gold swing option calls and shorting USD JPY. Well, let's take a look at Nasdaq. This market is a nightmare to trade at the moment, mainly because it's firing so many miss signals. Now, what I mean by miss signals is that after filling this fair value gap of the weekly chart, this was a proper rejection happening. And I would have thought personally that with this rejection happening, which basically filled this entire fair value gap over here, we should have gone down, as in like strongly gone down, not like lethargic gone down. We should have like gone down the next day in full waterfall mode and went for this low because that's the inside daily candle low, and you just like went up in a very very turtle-like fashion to fill that fair value gap, which you did. But when you're rejecting it, you need to showcase strength when you're rejecting it. Like sellers need to come in full force and showcase strength that they're topping out the market. But this was just like a very weak showing where the next day you went up again. There it is. That was what I was looking for. And when I saw something like this happen, in my mind, this was perfect. This was as in like a proper daily bearish order block where the order block is being formed at key SR levels, which are mapped out on the weekly. And because of that, I was under the impression that it is starting its decline, at least till here, minimum. Because what stands out to me the most is this one-sided price action like that. This one. So I think the market definitely wants to come down to like fill this. When I was looking at the market, like when it got rejected over here. Okay. Now the thing is, there is one thing standing in the way, which did not want the market to go down, and that was the FOMC event when Papa Powell came in and cut interest rates by 50 basis points, which happened right here. So that makes this down candle like a local support zone. Like you can call this like Papa Powell support zone. This is where the market defended itself instead of going down. Like this is when Powell introduced 50 basis point rate cut. You went down, but then overnight you started pumping and you basically made a new high, which was like, this is untested level, and I get it that the market wants to retest it and then jump back up again. So in this case, I was anticipating that, yeah, it's gonna like cause a jump up, but I was not thinking that it's gonna go and take out this high over here. So at the very least, I was anticipating that the market is gonna come till here on the bounce, and it's gonna reject from the bounce. Now this was a very, very perfect level because it's filling the entire fair value gap. Like this entire down candle got filled over here, and we are filling the fair value gap inside the daily bearish order block. So I was like, you shorted over here like that, put a stop loss above that, and then basically target the lows. You know, it's a 5.42 risk reward ratio. Even though I'm not like targeting new lows, but I'm not thinking that it's gonna break the FOMC support zone. At least targeting the lows makes sense. Now pay attention to the price action over here. Now you see how the market is unwilling to go below the support zone. It keeps getting bid up. That's because it's the FOMC support zone and the market realizes it. The precise reaction from the weekly level. This is where I shorted the market. And when I saw this reaction happen, I basically closed it at this weekly SR level because in my mind I was thinking, it's Friday. I don't want to be holding the position on over the weekend. And we had the pump because of the NFP data. So it was a very, very good short position, but I basically closed it here for like a good profit. And I just watched. I was like, I want to see the market give me indication that it wants to break below this consolidation. But lo and behold, what does it do? By the end of the day, it's basically sitting at the same level where I had shorted it. And I'm like, what the fuck? Like, it was supposed to, on the daily chart at least, give a solid down candle because you had like inside daily candles. You rejected that. You came all the way down here. I would have thought that, these lows would have been run out. But instead, it decided to go up like that. So I'm like, fine, like we'll see what happens next. And then the daily candle yesterday, it basically rejected the same level I was setting at, came all the way down. However, it did not break market structure. Now, what do I mean by that? It did not go for these lows, which were like ripe for the taking. As in like these are equal those sitting over here. Why would you not go there and take them out? It's just annoying the way Nasdaq is behaving. Now, since you have tested this level 3 times now, the way it looks, I am quite inclined to think that Nasdaq is going to break out, and we are likely going to go for this high here. If we're going to go for that high, then may as well go further up. Now, what do I mean by that? So if we're going to go for that high, you would be venturing deep into this 3-week candle bearish order block. If you break above that high, you are basically threatening a breakout above this 3-week candle bearish order block. And in that case, then there's nothing standing in the way to like new all-time high if that were to happen. Now, is that going to happen? Possibly, it could happen. But some things just don't add up in my mind. That this is an untested, I wouldn't say untested, but this is like a resistance zone too on the 2-day chart. So you are battling with like some overhead resistance. It's not easy to just like go up and take out a new all-time high. The only reason I'm saying that it's gonna do that, like it has a potential to do that, is because this here is a inside 2-day candle, and the way it's like trying to punch into it, it could go even up till here to tag the upper end of the inside 2-day candle, which is like so close to the all-time high that it may as well take it out. So yeah, like I'm conflicted in terms of what do I want to do with Nasdaq, because I don't want to long it right here. Like the risk reward ratio is terrible from like a swing perspective on the weekly chart, but I also understand that the weekly candle is wanting to expand to the upside. Like when I was looking at the weekly candles, it took out the weekly low after filling this fair value gap. Once you take out the weekly low, I think all bets are off. You kind of want to go on the downside, because any time in the past we have taken out weekly lows, like over here, you had like further downside. Even over here, you took out the weekly low, you had downside. The only time where things haven't really panned out like that is over here. You took out the weekly low, but then the week after that, you basically punched higher. Now, the reason you took out the weekly low over here is because you attacked a weekly high, so there was like a pullback, and that pullback got defended, and then you punched higher again. Similarly, over here, when you took out a weekly low, that was just consolidation, and the week after that, you had a punch up over here. So I'm thinking we're in a situation where once you took out the weekly low over here, just like here, and you had a punch up, you're kind of in that kind of a situation where the previous 2, 3 previous week or 10 days, that was just consolidation, and the market wants to rally higher and at least go for this high at 20,352. Now we could rally higher going to the CPI event, which is like on Thursday. Now after the market attacks this high on CPI event, I would be on the sideline. I would not be wanting to be long on the market. You could stay long going to the CPI event, and it would like definitely attack this high. But once this high has been attacked and the CPI event is out of the way, I think the positioning could flip and you could come back down again. Similarly, on how when the market was going down over here, the positioning had gotten extremely bearish, and everybody was thinking that the market is going to collapse and it's going to go all the way down. But they kind of forgot that on the 2-day chart, this was a bullish order block. It's like this. That was a bullish order block here. And you were basically being bearish going into a pretty solid support zone where you could claim that this is a support zone, like from an SR level perspective too. That being bearish going into an SR level top and a 2-day support zone, that generally doesn't pan out well. So in this case, what happened is that once the NFP numbers came out, which gave you like a bearish reaction, this is where the NFP numbers came out, and you went down, tested the SR level. Look at how the market started going sideways into this resistance zone, sideways, sideways, sideways. This is where the CPI event came out, and you had a bearish reaction to the CPI event. That was what the market opened. However, I bought this reaction to the downside because in my mind, I was thinking that the positioning is going to unfold to the bull side. That it's just putting in a dip, and it is wanting to create a higher low in comparison to this low, and it is wanting to defend this 2-day bullish order block. So once you broke the NFP high, that was sort of confirmation that this entire drop was an ABC correction. because this C wave had a proper 1, 2, 3, 4, 5 to it, and this fifth wave had ended with the CPI reaction coming bullish. And if this fifth wave had ended, that basically means that this entire C wave has ended. If the C wave has ended, it means it's going to go for the wave B lower high. If the wave B lower high is going to get taken out, you're going to go and take out these highs, and you're going to go into in here, which we did. Now the thing is, I over here the structure is just like very meh. I don't have a proper structure with the NFP candle. So this was the NFP candle, right? Like the market just punched above it for the third time. This was the first punch up, went down, third punch up. It could go down, sure. I'm not counting on it, but it could go down. But since the NFP high has been breached, I am of the mindset that it's going to go for this high. Minimum, it's going to go for that high. No questions asked. So you could technically consider this as a support zone, like the most recent consolidation to the downside before a punch up. That is a support zone. So when the CPI data comes out, and if you were to test the support zone, I would long that, and I would be targeting that high. That would be an important setup. I think it's a strong setup. Like it's for just like longs perspective, this is a strong support zone now, and you could take a long position over here and target this high here. However, I wouldn't be surprised if we just like not wait for the CPI and we just keep rallying and we tag the high before even the CPI event happens, but just day after tomorrow. So you have tomorrow's day as well, where you can like expand the market, and it's very possible that it can like keep expanding going into tomorrow. So today should be like a good lesson on how China does not really have any effect on global markets anymore, where the Chinese market is down like 10.5%, and the other markets, like on the global scale, whether it's like US market, Germany, Japan, they're all positive, like they're going up, which kind of means that China was like sucking liquidity out of the global system and putting into the Chinese market, and investors like wanting to take their lethargic US equity positions and gamble with whatever is happening in the Chinese casino. Now that the casino is kind of busted at the moment, they're returning back to their old run-of-the-mill markets and being like, we're just gonna like play in this market now instead of like being in the Chinese market. But thing is that the only thing you gotta realize, the Chinese market does not control the money flow for other global markets. Japan's market has a control on global markets with the USD JPY pairing, because that influences gold, that influences yields, like I'm talking 10-year yields, and because of that, there's an influence in US equity markets, which would basically be what most investors want to care about. So just because China is going down, that does not necessarily mean it's going to cause an impact on US markets or like other global markets. It doesn't. Similarly, when China was going up, there was no uplift which is provided to US markets or other global markets. They were like unfazed. They didn't care much about it. The uncoupling of China from the global economy kind of occurred over here when they took over Hong Kong by force, or however you want to call it. But since then, I haven't seen any resemblance that the Chinese stocks are affecting the global economy. They don't. They're just like an isolated market now. However, there is evidence that the Chinese stocks affect silver, which is somewhat what we're looking at today. That since the Chinese economy collapsed, like there's a pullback happening, a major one, the daily candle on silver is like insanely strong. And you can look at how today's market, Chinese stock market opens at 6 p.m. my time. This is the 6 p.m. candle, which is 9 p.m. EST. So if you pay attention here, see this sell-off which happened? That initial sell-off is this sell-off, which began in Chinese stocks. So when I was looking at this and I was looking at silver, I was like, holy shit, that's a new find. I wasn't even aware that this is actually a case with silver. So since that high got printed, it's not like the silver market actually like collapsed immediately. It has like what you call like a time lag feature to it, where yes, there's a rejection, and then the rejection, there's a pullback. The pullback happened to like 0.75 fib. Then there's another rejection. At 0.79 fib. Then going into the New York cash open, when New York markets opened, that's when the real expansion happened. So technically, the high of the day for silver was printed when the Chinese stock market opened and it had collapsed, which basically made sure that is the high of the day. But in the meantime, silver went like back and forth before really expanding to the downside, which happened in New York session just like 2-3 hours ago. So if you trade futures, this is like a very good find because this high was like set in stone, and capturing 5% downside is pretty damn impressive on silver itself. So next time, keep in mind that if you see like Chinese bazooka come in place and Chinese stock market goes up like 4 or 5% on that rally, silver is going to go up at least 3-4% the next day as well. Like it kind of follows what the Chinese index does. Apple. Oh, temptation. I kind of want to long Apple. However, see, this here is a very good draw on liquidity, mainly because this level, this is what you call like equal highs. There was no liquidity tap. I would not call this like a liquidity grab. It's just like, poking slightly above and then coming down. So right now what I'm thinking is that Apple has a tendency to go up. If you want to bet on upside on NASDAQ, Apple could be a way to do it if you want to get like a better bang for the buck. That was a very sharp or precise tap of the 0.618 Fib, which is raising concerns in the mind that this is an ABC correction. And the ABC correction is mostly done. So basically, this is the wave for lower high before you went down. And I think the wave for lower high is going to get violated, and you'll be going for this gap over here. If you go for that gap, you are going to be running this high over here into like filling this gap. See that open gap over here? So I think that's where Apple's going to go. Do I want to take that long position? No, I'm okay. I don't want to. It's not worth it. So the pattern in play at the moment for Apple is this inside 2 week candle failure per se. Failure as in like you're closing this daily candle above the high. Like I want to see how the close is like, and then I'll decide if I want to take a position or not. Because this is like a bit lethargic. I want to see some more upside to it on this daily candle. We'll see if we get it or not. But if we do close above this previous high on a closing basis, I think Apple could squeeze with Nasdaq squeezing higher. At least till here, minimum target 233. Microsoft. Okay, this sucker has been confusing the hell out of me for a while now because it's kind of detached with whatever Microsoft is doing. Oh, sorry, whatever Nasdaq is doing. What I don't like is that on the monthly chart you have a flat open. You cannot leave a flat open on the monthly chart, which is why I haven't like tried to short Microsoft, even though Vince keeps asking me. But can I enter puts? Can I enter puts? I'm like, no, you do not enter puts on Microsoft when there's like a flat open sitting over there, and it's like one of the largest companies. You don't want to be shorting Microsoft ever. Just no, 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 no. The pattern play for Microsoft is this inside 2 week candle, and we just took out the low. We are going into this weekly support zone. Now it's a decent sized weekly support zone. I wouldn't say this is the strongest one. But yeah, I could get along with it. That this is it's doing its job. Let's just put it that way. Now, what I do like is that the market filled this fair value gap and it's rejecting it. But is it like actually bottomed? Possibly. I don't know. Like just because there's a reaction coming off of it, I don't think that's enough price action to determine that this is the bottom. It's a bounce. Yeah, it's bouncing. I would not be surprised, however, that it comes down further lower to fill this gap, open gap over here, and then go higher. So I think there could be like one more step down in Microsoft. But so far it's like good price action to carve some kind of a bottom. Like generally you don't want the market to go all the way down to your gap fill. You want to see some kind of a bounce happen so that people start longing it. And once there's some kind of a bounce happening, the market just like goes immediate reversal to the downside, stops those people out, makes them bearish again, thinking the market is collapsing, and then start shorting it. Except the market is like filling this gap over here and does a solid reaction off of it. So I think that might be the play for CPI. I would be looking closely on what Microsoft is doing going to CPI event, and that could give us like potential indications of what to do with even indices. The only way I would not be wanting to expect further downside is if Microsoft rallies and takes out this lower high at 419. The moment you go above that 419 lower high, I think that's a bottom set in place and you're resuming the upside. Okay. There is a growing sentiment though that this is a broken support However, I've never seen a support get broken just on the first tap. So I think that could be like a fake out, which could suggest there's like more upside to Microsoft, especially when we talk about this being an inside 2 week candle failure. On the monthly chart, you could have some more evidence that it wants to go higher because there is like a flat open sitting over there. And that flat open is not just on the monthly chart, it's on the quarterly chart too. So yeah, I am not wanting to short Microsoft when you have a gap sitting on the quarterly chart with a flat open. So I'm quite aware that the market wants to go till there, which is why I'm like kind of anticipating the CPI event is going to have like a bullish impact, and you'll be running the highs on Nasdaq because part of it is going to be providing a solid reaction because of Microsoft too, as you like tested the support zone here. Oh, JP is reporting. Nice. So if there's a reaction coming from like a support zone, I would be wanting to take long position on Microsoft and at least target this flat open on the monthly chart. So why have the support zone built out? It's the 2-day support zone. The 2-day chart, that's a bullish auto block. And we just tested it today. This test. And the test happened at the monthly open too. See that yellow dotted line? And that's where we opened the month on October. Tested it. I think it's looking to go up. So if you want to profit off of JPM's upside, Dow is your play. Like you're looking at this here. I mean the pattern on Dow is this inside 3-day candle failure. Okay. Now this daily candle, it could have put in a bottom for Dow. Could is the keyword where I am thinking that if JPM is bottomed, which is at this candle, because JPM had a down candle, right? Let me show you. Let me show you. Hold on. So this candle was this candle here. This sell-off was this sell-off here. And this bottoming pattern is this bottoming pattern here, and it's happening exactly at the lows of Dow. So I would be of the mindset that if Dow has to go up, This is this is where Dow needs to shine and go up from here. And if you wanted to take a position, I think that's a fair position to enter. It's a 3.41 risk reward ratio. I think it's solid, solid, solid. Especially when you look at SPX. Yeah, this fucker. I mean, it did not even come down to like properly run this low. What the fuck? So yeah, like it's making an ascending triangle of some sort. Quite annoying. Like at least give it a sizable pullback. I was at least thinking that this SR level could get tapped, go a little bit deeper, or deeper, deeper, deeper. I mentioned that this is a breaker. This is a very, very strong breaker. That was the previous resistance zone before the sell-off. You rejected the resistance zone, and then you broke above it. So if you're coming back to retest it, you have to give it precedence that this will be holding a support. No, it is holding a support, except it didn't really come back to test the SL level. It just like hovered above it, and it's like wanting to break out now. I think the breakout is going to be pretty severe. It's been consolidating for like days and days. So I would be surprised if it doesn't have a violent breakout. And I think part of the reason you will have a breakout is because of JPM's earnings. So right now, my thinking is that with SPX, that's a 1, that's a 2, that's a 3, that's a 4, and we're about to start a 5. The 5 is going to be a solid one. I think you're going to go up at least 100 points, give or take. All right. Which is similar to what Japan stock index is doing. Like it's been defending this wretched trend line for God knows how long. And it's finally trading above here. This has been the resistance zone. So I think if Japan is going to squeeze, it is going to cause a squeeze in the global markets as well, including S&P 500, Nasdaq, Dow Jones, and German DAX. So yeah, like best bang for the buck, I think it's Nasdaq at the moment. Nasdaq is the driver. It's going to take it all the way up. But if you're looking for like a high risk reward ratio, I would say Dow has a pretty solid risk reward ratio. It's a 3.5 risk reward ratio to the top. That it can definitely offer you like that oomph to like take the market higher. So yeah, that's pretty much it. Other markets, I don't have much conviction on what the other market's going to do. Like Nvidia is in breakout mode. I mentioned that on its channel. But the only thing is that Nvidia is pushing with this flat weekly open, and I'm like, what the fuck? Then there's no way to it. So at some point, it's going to come back down. Is it going to be like, tomorrow? Probably not. It's likely going to click at an all-time high, and then it will be like seeing a rejection. But the weekly kind of like far gone at the moment, where makes me think that it may not have much upside to it. Where I feel like money's going to start flowing out of Nvidia and it's going to go to the likes of Microsoft and Apple, which will be carrying the index up. There's a setup being formed on Meta, which is an inside daily candle, so you should mark that out. AVGO is definitely going for 185 because it's an inside monthly candle failure, as in that is the setup. That was the inside monthly candle failure, so I think it's gonna have more of a upside to it. It's up to you if you want to like take a position on that, but I think the upside is not that much. You're just talking about like $5 push. All right, I'm gonna call it a day here. I think I've covered enough. But if you feel like something needs to be discussed, just post the name on the Risk Respector channel and I'll get to it. Until then, I'll see you guys tomorrow. Have a good day.